If this is your first time here, be sure to hit the subscribe and notification button so that you don't miss out on future content. And of course, like the video so that it gets shared with other individuals. And if you're interested in making an M1 portfolio, my referral link will be in the description. Now for today's video. Welcome back. This is Xavier with the charts, talking some key levels in today's market. We saw a huge sell-off today, which we've been waiting for the direction. Was the market going to break high and break 30K, or are we going to retest the pandemic levels that we saw way back in February and in March? Of course, today we got our answer. Down we go. If you've been following on my last video, I talked about the key levels that we were looking for basically in the Dow or in the S&P, whichever it is that you particularly follow, where the market had basically been bouncing around that 27.5 range. We saw it originally happen back here in June, and then of course way back here the market for the longest had been holding below that 27K, just below that 27.4K mark. You can see it right here multiple times where the market tried to break out of that 27.4, 27.5K range, and it just had a hard time breaking out. Way back right over here in December of 2019, you can see again that the market then retests that level of 27.5 and then bounces off that level, and of course we begin to trade higher. And then we see the exact same thing right when the market started to sell off back in about late February. We see the market broke through that 27.5 level right here on this day on February 25th, and then subsequently for the next few trading days the market tried to retest 27.5 towards the upside with little avail. And it says you can see the market subsequently then just started to fall and sell off, and we got to see that point again here back in the beginning of June, where the stock market again tried to retest that 27.5 and then subsequently sold back off down to 25K. And so basically that's what we saw. Again, a lot of what we see in the market is for the most part slightly predictable. We're looking for pullbacks or we're looking for resistances. When it comes to trading, whether you're swing trading, day trading, or doing long-term investing, it's very important to pay attention to basically supports and resistances. Like I always say, fundamentals lets you know which company to get involved with. If the balance sheet looks good, if you see that the company has a solid moat, then you know you found yourself a solid company to invest in. Technical analysis, on the other hand, lets you know where to get in on the chart. You never want to be buying too high and then have to experience the hold as your stock collapses and then the subsequent waiting for the long recovery. As you can see, the market basically sold off in the matter of just several days, but took several months for it to recover. And of course, the worse the economic collapses, the longer it takes for the market to recover. And of course, that's basically where we are at today, where the market has, of course, given us the direction that it's going to. What we should be looking for, if you're a long-term portfolio holder, for example, I have an M1 portfolio that I created this year that I wanted to create. Again, my purpose of having this portfolio is for passive income via dividend investing. And I'll basically show my portfolio today. Looking at it, we've earned quite a few dividends today, quite a few dividends this month. You see here from Enbridge, Pfizer, Wells Fargo, Southern, Microsoft, Flowers, ORI, Realty Income, Prudential. So we've got quite a few different companies that basically pay out cash dividends throughout the year. Some of them pay monthly, some of them pay quarterly. And of course, as you can see here, roughly, I haven't had to do anything for this money except, of course, hold these positions. And we're looking at roughly around, you can say what, 20, 40, 50, 60, maybe around $70 in passive income. And so for this particular portfolio, my goal for this year is to earn $100, at least $100 of passive income, and I'm basically right on target. I've chosen a good basket of stocks along with holding some positions that I do deem my risk portion of basically my portfolio. One change that I did make is I did add financials, some financial stocks like Gain, Main. Most of these stocks pay dividends, and so I decided I would add them to the portfolio. Some of the risk stocks that I do hold are, of course, companies like Chase Bank. I did add, of course, a tech section, which basically is just like your Facebooks, your Squares, etc., Disney's, basically kind of the more safer tech / entertainment stocks, with a little bit invested into things like Dave & Buster's, of course, Prudential's, which is a company that holds a lot of money for example, like the nursing union, 1199, and of course others portfolios for different companies for basically retirement. Of course, JetBlue, I do like JetBlue, and of course Norwegian. So I do have a lot of depressed stocks that I think may offer some long-term growth. And then basically a lot of my dividends are probably companies that you're very familiar with, like Pfizer, Coca-Cola, Verizon, Simon Property. At one point, Carnival Cruise did did have a dividend, Bank of Nova Scotia. So we have a little bit of Canada stocks, Canadian stocks, Canadian companies, and then of course a little bit of realty and things like LTC, Ladder, a little bit of oil and Enbridge. I do like Canadian oil, and of course most people are very familiar with AT&T. And of course, with the market coming down, we'll have the opportunity to, of course, to buy some cheap stocks. But overall today, we were down just slightly, 3%, not really a lot in terms of having a huge pullback where I can basically dump money into the portfolio. So I've been looking for some pullbacks, and we're finally going to get them. So we may be in for, of course, the long haul. So talking to some key levels for the stocks that I'll be looking for. I spoke last time about Microsoft, about grabbing those 200s in Microsoft. If you had followed my last video, you were able to make about $4 to $5 on that Microsoft play. If you had bought, I had my buy orders in my Thinkorswim account. I have another retirement account with TD Bank utilizing the Thinkorswim platform, and I put a couple of shares there at Microsoft at 200, and subsequently had sold some at 204, and then basically going to be piecing myself into Microsoft. We did see a break below 200, so I will not be buying any more Microsoft at 200. My next level to buy Microsoft is at 188. It would be my next level where I would look to add to put in, of course, for Microsoft. Talking Apple, I spoke about this last time in my previous video, that I'm looking for Apple to start buying Apple at about $100 a share, and then basically scale all the way down to where I think the market would pull back. If we have a really strong drawdown, we could see Apple come all the way down to about that $76 to $78 area. But what we did see is, of course, if you look at the chart right here, you can clearly see that Microsoft broke multi-levels. We saw right here, for the most part, that Apple was holding above 112. We see a break below 112 and a subsequent retest on 2 different days where it falls short. And we start testing that next level here where we basically broke out. So the market looking like it wants to fill the gap, and of course, that's where I have my buy. Another stock, of course, that I like is also CHWY. CHWY is another stock that I had talked about, which is basically your Amazon for pets. If you're a pet owner and you like CHWY is basically a stock that is basically like the Amazon for pets. It has a little bit of, for those who subscribe to the platform, it gives you like all these different benefits. Kind of like this, kind of liking the stock. It's basically kind of like a growth stock for me, and I'm looking, of course, to see a little bit more of a pullback. I started buying here a little bit at between 58s, and I put in a little bit more here at 52, and of course we could see a little bit of a pullback down to 43s, and then I'll be watching it, and then of course buying it if I still think that it's a strong stock for the portfolio. In terms of some of the other things that I would be looking for, I will be adding, of course, to the finance portion of my portfolio. And then of course, if we really start to see a strong pullback within the market, we actually could see stocks retest their COVID-19 levels that they hit way back in basically mid-March. So if we get a break below 25K, I would wait. If you're going to be adding money to your portfolio, I would wait. Your next level is going to be down here at just shy of 23K. And then our next level is going to be down here at about 21K and then 18K. Those are basically going to be the levels that you're going to be looking for over time. One other thing that I did want to touch on was Wells Fargo. Wells Fargo, for the most part, people had been listening to stories about, Warren Buffett got out of airlines, Warren Buffett got out of banking stocks, but that was way back here in February, before Wells Fargo, of course, kind of Peter Panned down like many other bank stocks. And basically since then, it's basically been in this channel here for quite some time. So actually looking over here, if you look over at Seeking Alpha, if you look at the previous times that that Wells Fargo has basically fallen off. So we'll look back here and look at the dividends. So looking at Wells Fargo in terms of its growth history, back in the early 2000s, right after the crash in the 90s, you see Wells Fargo comes onto the scene with a dividend of roughly 44.7 cents, right? And then over the next, from 2000 all the way to 2008, right around the crash, we see that Wells Fargo and banking stocks did fairly well. As you can see, literally, they increased their dividend roughly threefold over that time. And of course, if you actually look at Wells Fargo back then, you see Wells Fargo had a real nice run up from about, where was it? From 2008 all the way down here at $12 to a high of 58. And then subsequently, we see, again, looking back at Wells Fargo, like I said, from the 90s, if you look back at Wells Fargo from the 90s, where it first kind of came onto the scene, let's go back here, let's go back into the chart, into the 90s, and of course, we had a huge rally, right? So when Wells Fargo came onto the scene, we had a huge rally all the way up into the late 90s, right? From the late 90s all the way up from about $15 a share, nice ramp up right into, of course, the collapse into the 30s, basically tripling its price. And then of course, like most stocks during the crash, came down and then of course set new highs. The reason that I bring it up is because it might be something you might want to keep on your watch list. As you see, not only did it increase in its share value, but it also increased in the amount of dividends that it paid out, not just once but twice. We see that exact same pattern here during the crash. Subsequent rise, again, the crash of 2008-9, and then we see that the stock again cut its dividend just like it did recently, right? We see that Wells Fargo did cut its dividend to, I think, 10 cents. Let me see. I think it's 10 cents now. Yeah, so from 10 cents, it was 51 cents. So we could see that again with this subsequent crash, whereas Wells Fargo is basically beaten down, but once it gets going, we could see Wells Fargo as a really nice growth stock, as well as a nice dividend play. These are basically the stocks that I'm going to be keeping my eye on. Like I said, Microsoft, we already know the levels. We already know the levels for Microsoft, for Apple, for CHWY, and then of course for Wells Fargo. And these are basically the stocks that I'm going to be keeping my eye on over the next couple of months.